96% of altcoins from the 2017 bull run are now dead. But here's what I found after studying the 4% that survived. They weren't the coins everyone was hyping on X. The survivors all had three things in common, which in turn helped me identify the 6 altcoins to hodl long term. As usual, I'm not giving you any financial advices here, and I encourage you to do your own research. While everyone's buying meme coins trying to get rich very quickly, big companies like Visa and Google, even the US government, have been quietly partnering with 6 specific crypto projects. Most people don't even know these partnerships exist. Today, I'm showing you exactly which 6 projects these are and how I would split $10,000 between them. So, what makes a crypto project survive when 96% fail? There are 3 things. First, real companies moving real money through their networks. Second, earnings fees from actual users, not just token price bumps. And third, lots of developers building on their platform. The 6 projects I'm about to show you set the standard for crypto projects, and the last one might surprise you. Kicking off with Solana, and I know it went through some rough times with network outages, but here's what most people don't realize. Sol now processes more transactions than Ethereum, Bitcoin, and all the layer 2s combined. Let me break down the numbers. Over 45 million people use Solana every month. That's 5 times more than Ethereum's 9 million users. And check this out. Visa just partnered with Solana to test instant payments. When Visa, the company that handles your credit card, chooses Solana for payment tests, that's a pretty big deal. Look at who else is building on Solana. PayPal launched their stablecoin, PYUSD, on Solana. Franklin Templeton, a massive investment company, put $350 million in tokenized funds on Sol. And there's this new upgrade called Firedancer that makes Solana 3 times faster than before. We're talking about a blockchain that could handle the same volume as traditional payment systems here. Most importantly, Solana aims to become the decentralized solution for moving all stocks, bonds, traditional financial instruments, and currencies on chain. People used to joke about Solana going down, I know, but now it's bringing us the internet capital markets. What do you think about this whole traditional finance going on chain? Let me know in the comments, guys. And we are now coming to the project that started it all. People love to talk about the Ethereum killers, but here's what's actually happening. Ethereum isn't just a cryptocurrency anymore. It's like a savings account that pays you interest while also being the foundation for most of crypto. Right now, approximately $160 billion worth of ETH is locked in staking. People are earning around 4% per year just for holding ETH. Better than most savings accounts, if you ask me. It's over 35 million ETH staked. More than a quarter of all the ETH that's out there that exists. Folks are locking it up for the long term, it seems. Here's why that matters. Ethereum still has the great majority of all DeFi money. That's about $95 billion choosing Ethereum over all the other options. And there's this thing called Eigenlayer that's pretty interesting too. It lets people use their staked ETH to secure other projects too. So you can earn rewards from multiple places with the same ETH. The big institutions keep choosing Ethereum too, guys. BlackRock has over $17 billion in their Ethereum ETF. JP Morgan runs settlement tests on Ethereum. There's this idea that I got from Nassim Taleb called the Lindy effect, which states that the longer something has been around, the longer it's likely to stick around. Well, Ethereum has been number 2 crypto behind Bitcoin for about a decade now, and we can safely expect it to stay here for at least another decade. But Ethereum has one big problem, and our next project is solving it. Anyone who has used Ethereum knows the pain. Gas fees used to cost 10, $20, $30 just to make one single transaction? Well, Polygon fixes this problem by making transactions cost less than $1. But here's what makes Polygon really special. The US government chose it to put official economic data on the blockchain. Now, when the government trusts you with important data, that's a pretty huge validation. And the real-world adoption is growing too, quite fast. Companies have put over $1.13 billion in real-world assets into Polygon. Securitize, for example, a leading real-world asset tokenization platform, has recently deployed over about $73 million worth of tokenized assets on Polygon. These include offerings from financial giants like BlackRock, Apollo, Hamilton Lane. Here's the thing. As more people use Ethereum, they need cheaper alternatives. Polygon is the clear winner in making Ethereum usable for everyone like you and me. But if Polygon handles the scaling, our next project handles something even more important: connecting crypto to the real world. Here's a problem most people don't think about. Blockchains cannot access real-world information just by themselves. They don't know stock prices, weather data, or sports scores. That's where Chainlink comes in. It's like the messenger service that brings real-world data to blockchain. Without Chainlink, most DeFi applications couldn't work because they need to know things like, what's the current price of Bitcoin? Well, Chainlink is also the sole leader in the Oracle space, miles ahead of the competition. 2 out of every 3 projects that need real-world data use Chainlink. But here's more big news. Chainlink are partnering with Swift. That's the system that connects 11,000 banks around the world. When the global banking system chooses your technology, that's massive. And look at their other partnerships too. JP Morgan uses Chainlink for moving money between different blockchains. Google Cloud works with Chainlink to bring web data to crypto projects. And here's why Chainlink is so powerful. Once a project starts using Chainlink for data, it's really hard to switch to something else. And to be honest, there aren't many good alternatives anyway. Every time traditional finance moves more into crypto, they need more real-world data. Chainlink is the company that provides that data. Speaking of traditional finance, our next project just survived 5 years of legal battles and came out stronger. At 5th place in the list is XRP. And let me tell you, the XRP army went through hell with the SEC lawsuit. But while everyone else was focused on the legal drama, Ripple quietly built the biggest payment network in crypto. Here's what they accomplished. 300 banks and financial companies, basically financial institutions, now use Ripple's technology. They process over $70 billion in cross-border payments. And these aren't small companies either. Bank of America, JP Morgan, Santander, they all use Ripple's network. Here's something interesting about XRP supply. About 60 billion XRP are in circulation right now. Ripple can only release 3 to 4 billion new XRP per year, so the supply is pretty controlled. And the scale is also impressive. Ripple's on-demand liquidity has processed over 1.3 trillion in quarterly volume. That's real money moving through their system. The best part is that the legal uncertainty now is mostly over. The SEC lawsuit is settled, and the global climate towards crypto is warming up slowly. The first ever XRP ETF is already on the market. It just got released. The Rex Osprey XRP ETF saw almost $25 million in trading volume within guess how long? Just 90 minutes of trading. Now it is becoming much easier for regular investors to buy XRP. And lastly, cross-border payments is a $1 quadrillion market every year, according to the IMF. Even if XRP captures just 1% of that market, it's huge for the XRP army. But our final pick is the one most people have never heard of, and the growth numbers will blow your mind. Sui is the project nobody talks about, but probably should. It was built by engineers who used to work for Meta. the company that owns Facebook and Instagram. These folks understand something most crypto developers don't really: how to build systems that can handle millions of users at the same time. Check out these growth numbers. Sui processed 2.7 billion transactions in just 6 months of 2025. And on some days, they handle over 30 million transactions. To put that in perspective, that's more transactions than most blockchains handle in entire months. And here's a major validation. Google chose Sui as a partner for their new Web3 payment system. When Google picks your blockchain for payments, that's not really by accident. Sui works differently than most blockchains too. Instead of processing transactions one at a time, it can handle many transactions simultaneously. That's why it's so much faster. They also have over 120 validators securing the network, and no single validator controls more than 3%. That means the network is really heavily decentralized, and I approve. Even during the brief downturn of March and April this year, Sui kept over $1 billion locked in its ecosystem. And during good times, it peaked at $2.28 billion. And to be honest, I expect this value to grow. Sui isn't just faster than any other blockchain, it's built completely differently. That technical advantage is hard for other projects to copy, I think. And if you're also bullish on Sui and you consider it's here to stay, then like this video and let's get more people on board. Now, let me show you exactly how I would split money between these 6 projects. If I had $10,000 to invest, for example, I would split it the following way. I would start with 30% into Ethereum, the safest choice. Ethereum has the longest track record and earns staking rewards. 25% would go to Solana because of their growth potential, the major partnerships like Visa and PayPal, and their internet capital markets quest. I would put another 20% into chainlink as it dominates the Oracle market with no real competition. Polygon is essential for scaling Ethereum as more people use crypto, and I would put 15% in it. Sui carries high risk but also huge potential with superior technology, so 7% go into it. And the final 3% go to XRP, the institutional hedge. I know, a small position in institutional payments, but still something. Crypto content, guys, I know can be very theoretical at times, but if you're looking for more such practical takes such as this portfolio that I just showed you, then subscribe to the airdrops.com channel because there's plenty more to come. This isn't a get-rich-quick portfolio, I understand. The goal actually isn't to turn 10,000 into a million in 6 months. The goal is steady growth over 5 years, while most other altcoins disappear. Remember, even these safer crypto investments are still risky. So only invest money that you can afford to lose, and always do your own research before buying anything. Here's the bottom line though. Projects with real partnerships, real revenue, and real developers building on them are the ones that survive. And these 6 projects check all those boxes. Well, that's it from me. I'm Stan. Thanks for watching, and I'll see you.